My name is Michael Guyett, publisher of the Lead Lag Report. Join me for the hour are two legends, at least in their own minds, Adrian Zdunczyk and Jeffrey Hirsch. I invited both of these gentlemen on because they actually came out with a really interesting study looking at seasonality when it comes to the crypto space, which I myself am curious about, given that I'm a believer in seasonality and a lot of the work that Jeff has put out through Stock Traders Almanac. So let's start off with a quick intro. Mr. Zdunczyk, introduce yourself to the audience.
Thanks for the very kind intro. Mike, it's an honor to be on the spaces. I'm a big fan of yours, and as well as I'm a big fan of Jeff, right? So it's been always a big pleasure to work alongside Jeff. And I think that, long story short, without further ado, we have put together, Jeff and I have put together the seasonality article, the seasonality of Bitcoin, and the whole kind of like approach, the first attempt, accredited attempt at what's going on and what's cooking in the crypto scene and how it all correlates to the stock markets, right? So that's the value that I'm gonna try to provide. So it's not so much who I am, it's more who I or what I want to teach everybody. So that's the utility you can expect from me today.
And then Mr. Hirsch, go ahead.
Hey there. Great to be with you, Mike. Thanks for putting this together. Fan of yours as well. Adrian, he and I have become quite tight, you might say. A lot of time zone differences and work together, but I thank Adrian for coming up to me at CMT in New York, the annual symposium, and just laying it on the line that he's a big fan of the Almanac and the seasonality, buff, and really was him making the pitch to me to do this study together. Yeah, we put each other through our paces, and it was a real collaboration. I mean, kind of like Lennon and McCartney or Jagger and Richards. We really wrote back and forth together ideas and copy and content and the graphics and the charts and tables and stuff. So it was a learning experience for me, and it was a good exercise to put Bitcoin and Bitcoin seasonality through the Almanac paces. I think my father would be proud and interested because we really use the sort of critical thinking and iconic thinking that he taught the world, over 50 years ago, almost 58 years ago now. So, great to be with everybody.
All right. So Adrian approaches you at the, I'm going to assume it was the CMT symposium. Yeah. He does a pitch. What was the first initial thoughts? And how did Adrian approach you to begin with?
Well, I mean,
what he thought?
He's a stark looking guy. He's got the shiny bald head, the beard. His eyes were shiny as he was smiling at me. And he was just, he's a real mensch. And it was just, I think we were actually at Brian Shannon's book release party. So it was a real, just cordial social event. And we were chatting around with other people. And then, we saw each other a few other times and chatted a bunch during the symposium. But it was the work we did afterwards. A couple of Zooms we had, or Microsoft Teams, whatever the platforms were. And, the back and forth. I mean, it was fun to get to know each other in New York. But then it was really, just eye-opening to dig in with his mind and his respect for seasonals and accuracy and data. And, that's one of the things we still got to work out is, what the closing price of Bitcoin is. It never stops. 24/7, 365. All right, you do it at midnight where? New York, London, Poland, where? So there's lots of work to do still.
I hadn't actually thought of that, but that makes sense. If you're going to do a seasonal study based on prices, you got to have some consistency on when it actually stops trading, which makes that challenging. Adrian, how did you even get familiar with Jeff's work? It sounds like you obviously knew of him before this.
Yeah, I'm holding the Stock Traders Almanac 2023 in my hand right now, and I did the same last year with the blue version, and I was amazed, right? Because ever since I got the CMT accreditation, the CMT charter, of course, I had come across before the Jeff's studies, basically, right? And every time I read through it, I had been aware of how seasonality can be impactful, how, it kind of like correlates, with what the markets do, because you have the weather seasons, right? Which kind of like translates to what's happening in the food market, right? There is the supply shrink on the food, the crops harvesting and all this stuff. So there is some correlation, right? And I was, of course, very much amazed, with how consistent certain patterns were that Jeff and his late father basically put together in the book, right? And they've been doing that for 57 years. So that is twice as long as they lived, basically, right? So this is very commendable. And this is, I think, one of the most credible resource, if not the most credible resource available worldwide online and offline, that customers would use, that private investors would use, that the institutions would use as well, right? So it provides a frame of reference for investors to assess the risk. Because if there is a pattern that repeats itself over and over again over years, decades, and 50 years, 100 years, right? Then completely regardless of why it does so, regardless of the reasons why, if it's a behavioral reason, if it's another kind of like, again, temperature related reason like it does with the weather, it doesn't matter why, because if it transpires over the decades, right, perhaps there is some sense that there's enough of the sense to just pay attention to it, right? Because if there is a pattern that just repeats, and gives you basically 95% of chances of winning historically, then of course, even though you do not have the certainty for winning in the future, well, just maybe it makes sense to look at something, choose something, go for the odds that give you 95% of the win rather than go for the 5% of the loss, if you know what I mean, right?
There is something to be said for causation, though, my friend, not just correlation. And I think that was one of the original challenges when I started with Pop was, there's a lot of questions about, well, why does it happen, And I get that asked on almost every interview. I think Michael's asked me about it before, and we've gotten into it. And there are reasons. And a lot of it has to do with the consistent, regular behaviors, repeated behaviors of institutions and their money. And in this case, with crypto and Bitcoin, it's the collective, space that moves in unison. And the thing I thought was amazing was that there's this 4-year cycle potentially with the halving, like the presidential election cycle that it's been tracking so closely this time around, which I posted several charts on. But it's a little different, because the halving is an estimate. It's not an exact date like we have with the presidential election in the States. So I don't know, just one of the observations that I think was, enlightening to me.
So, okay, but Adrian, you mentioned, you said it kind of quickly in your race, you said, decades, right? So the skeptic would say, okay, so yeah, there might very well be seasonality, there might very well be patterns that repeat, but the sample size is a lot smaller because Bitcoin, is still a relatively new asset, right? Yep. So how do you think about the sample size aspect of this? Because that, I think, is where, it could repeat, right? But unless you have enough data to really have some kind of sense of confidence in that, it's unclear, right? If there's really something there, or if it's just random.
That was my biggest skepticism from the get-go, right, Adrian?
Yeah, man, it was. Of course it was. Right. So I had always been trying to play a little bit of a that devil's advocate up there. So the way I look at it, of course, I think we can all agree that, it has a way smaller sample size than what you compare with 95 or 96 years of whatever that is for S&P 500. 100 years plus, records for Dow, right? Since the late 1900s. Since the late 1800s. So altogether, it transpires to way less, how we call that? Confidence, maybe, right? Maybe, again, just reliability, right? It's difficult to quantify to what extent it's less reliable, right? However, I got to tell you, while approaching Jeff, I had also been driven by my own kind of like personal desire to understand crypto more, right? Because just like you said, Mike, there are some question marks, and the question marks are big, right? Regarding also for the sample size. However, there's over the years, that I traded Bitcoin, mostly, I still managed to notice a couple of very good repetitive patterns again. Okay. And I was lacking, just like you had, like I said, the stock traders almanac for the stocks, right? You have the version for the commodities, right? Jeff created, all of the variety of materials up there. Excellent quality, by the way. I was missing one for crypto, right? And until now, there basically have not been much of the study, of the real reliable study from the Godfather himself, right? From Jeff, that would just trace cryptos, right? And I was trying to understand cryptos in the first place more and deeper, right? And having this CMT accreditation, having got to meet all those CMTs at the CMT symposium, I figured out that, it's still the understanding of crypto is still immature, right? And by that, I mean that the people, who I would truly believe and rely on their, let's call it, opinions, even though I don't trade off the opinions, I was so much surprised that people who I would admire, for being, the very professional CFA, CMTs, combinations, KIAS, and all of those, accreditations, and they were still extremely prejudiced against Bitcoin because, it didn't fit in the traditional stock market model, right? So because the short narrative was that because it didn't generate a cash flow, then it must mean that it has no value, which is not true, right? So it tells me that there is something to it. There is some another angle that we need to try, that we need to search and seek, understanding for. And the seasonality is just a piece of an apple pie that we can try, just insert some more understanding, especially for the institutions, especially for all those hedge funds, especially for all those people, for all the CMT, CFAs, who should be the light at the end of a tunnel, well, if you will, right? Or should be what do you call it, like this, the spark, right? This light that is going to just show and guide you, what to do with that. So again, we got together with Jeff and we started working on something that may or may not turn into a professional market guide for crypto.
Well, that's the plan. I mean, this was your vision, Adrian, to, put Bitcoin crypto on the, traditional finance or TradFi map and put it through the paces of not just seasonality, which is a form of technical analysis, just price over time, but also all of the other disciplines that, investments and assets get put through. I mean, I don't just look at seasonality and you don't just look at technicals. We go by 5 disciplines of, seasonality is our foundation, what we butter our bread with. But, I look at fundamentals and tacticals, monetary policy, market internals, sentiment, psychology. There's a lot that goes into our analysis and our outlooks and our forecasts and the recommendations and trades that we make. So this is just the beginning, I think, for Bitcoin, for crypto. And it's, as I've said in some of our discussions, it's kind of, a proving point. As Michael wisely pointed out, the data set's a little bit small for a seasonal pattern. It's on the short end. I mean, I run some seasonal patterns for our sectors that we look at a comparison of 25-year, 10-year, and 5-year. So we look at short-term, long-term, and medium-term of multiple time frames. But that's why I think I sent you a chart to put on the space through direct message, Mike, of the seasonal pattern that I did. It's updated, and I broke it out into different time frames because of the difference. And you'll notice, I think we posted this part of our report. The left axis is huge. It goes from minus 200 to 2,000% moves. And the other side is minus 10 to 100, which is where I put the current year and then the other recent 5-year period, 2018 to 22. But there's still similar shapes to these patterns, and 23 is tracking those moves with that sort of September low, which was the reason we timed the release of this report. But it's really a time for Bitcoin and crypto to prove themselves, along with the halving cycle. I mean, the point that Adrian makes and shows in one of the charts that we put in the report is that, Bitcoin has never retreated back to the previous halving level. And the next one is scheduled for still April, I think. It was moving a little bit later in the month. And I don't know if that was one of the things I learned, what the whole halving is. And, we've got this seasonal rally, Q4 rally, which tracks very closely with stocks. And we'll see if Bitcoin has the staying power to track its own patterns. And I'm in, I'm a skeptic, and I was a skeptic, less so now, but I'm in. I think there's something here, and it's big enough that it's, not to be trifled with or yawned at. So I think it's an important time for cryptocurrencies and especially Bitcoin.
Is there more commonality in terms of thinking about seasonality for Bitcoin crypto as a parallel to stock seasonality, or as a parallel to commodity and maybe in particular gold seasonality? I'm asking because Adrian, you said it, right? It's about cash flows. It's something where I think you can argue there's seasonality for stocks, right? But for commodities, it's a different animal.
What is your observation there, Adrian, about Forex, NASDAQ?
I mean, it was pretty much NASDAQ kind of like a related thing, right? So when you, over the time of since, over the long-term averages, right? I put together the chart that tracked the 52-week correlation, and I took 200-week average of it. And basically, this long-term correlation is directional, right? It doesn't go down. It goes up on average. And it goes down, and it goes up, basically almost 400% over the past 8 years or so, right? So there's a lot of strength in how over the time Bitcoin has started to resemble more and more what NASDAQ does. And there is some, common sense to it as well, right? Because Bitcoin itself, well, it was built a little bit and at times driven by the narrative of being digital gold. And on one hand, it can be the digital gold, right? And on certain times and situations like you have in the Middle East, right? My heart goes out to all the people up there, by the way. It's a terrible thing, shouldn't be happening. So in situations like that, when you have the conflict, the military conflict, and it is a big headache to move big wealth across the border offshore, right? And play around with your money, then gold becomes a little bit useless unless you have a big, massive ship tank transportation for it, right? Or you can choose to transfer Bitcoin effortlessly and pay $10 for a transaction and have it in a minute or under a minute and transfer the same amount of wealth, right? And distribute it accordingly, otherwise. So there is some distinct utility for being this fast version, the digital version of gold in those terms. On another hand, for the speculation, right? So what I mentioned about these CMTs is kind of like being, very interestingly prejudiced. And the institutions, the family office managers, they are well prejudiced because they didn't understand what Bitcoin is. And it's fine in a way, right? Because on one hand, when you think about that, it's like they don't need that, right? Because they only need like 5 or 10% consistent return over the year. And they are good with their, $1 or $5 billion on their account. They don't need 10x, they don't need 100x, right? So there is this risk aversion profile and the law of diminishing marginal utility, which basically tells you that the more money you have, the less of the utility, the less usefulness the same amount of money will have, right? So the $100 is going to be of much bigger value to you when you have $100 in your account. And it's going to be of way less utility when you have 500 billion, for instance, right? So all that kind of like tells me that, institutions they're more risk averse, of course. So they don't need Bitcoin per se. So they need to have strong reason to enter the crypto market in the first place, right? Being this digital utility and the demand, this digital gold and the demand from the, ETF investors themselves, this is a good business to be had, one thing. And on another hand, Bitcoin has proven itself to be the risk asset, right? Much more than it is a digital commodity, if you will. So the risk asset, which is mainly driven by speculation, which is mainly driven by behaviorals, right? So I was extremely surprised to see that so many professionals, so many technicians, so many, financial analysts, the people who understand Bitcoin and how it moves based on behaviorals, they rejected this thought, right? And assume that it has no value just because it doesn't fit in the traditional stock market model. So what Bitcoin does, it moves mainly on behavioral stuff. And isn't that the whole beauty of technical analysis, to try to quantify the behavioral psychology in people's decisions?
I think just to answer Michael's question straight up, it correlates and tracks stocks, not commodities or gold. From initial research I did years ago, before I even met Adrian, I didn't see any correlation. I had a chart with it versus gold, the dollar, and stocks, and it just had its own behavioral, sort of news-driven pattern. But as it evolved, it seems to really track stocks. And as Adrian said, NASDAQ, and that includes the best 8 months, worst 4 months that we publicize in the Stock Traders Almanac. But I had a question, about the, risk asset, the flight to safety type of thing that you were talking about, Adrian. And we had a little chat in the office about, what happens, how do you transfer any boats to ship gold, but more, at least a pocket or something. How do you transfer crypto or get your assets if you don't have electricity?
That's a good question. That's a good question. So I think, that it's just a similar thing to what you have on the internet, right? So if you lack electricity, the internet doesn't shut down per se, right? The whole blockchain, the network doesn't shut down either. So it's just kind of like that you are unplugged and you need to find yourself a source of electricity to kind of like just plug in a way, right? However, it doesn't cause the whole network to just disable.
Right.
So it's similar with an electric vehicle, basically electric car, like a Tesla or something. That there are solutions to it.
And then the thing that I observed as we were preparing this report, and I was out at Future Proof out in California, the advisor show that the Ritholtz people put on with Advisor Circle, which is fantastic. There's a lot of crypto there, or at least a decent amount. There was sponsorship. There were new ETFs coming out there. And then I came back and all I saw on financial news, traditional news, trad news, if you will, was ads for, crypto ETFs and funds. So some of that institutional acceptance that we've talked about, or that we were, you were amazed didn't happen, seems to be picking up. There were some comments out of, who was it? Was it Gundlach, or somebody said something you sent me recently? Maybe it was one of the big investors, hedge fund guys, where I forget which one it was, talking about. But there's been several comments from, big institutional people and funds about, it having a value. So it's happening. And I didn't want to wait until we had 20 years of data to prove out a seasonality. I was excited and intrigued to get out in front of this and see if we can map out, the behavioral patterns of Bitcoin and crypto for traders and investors and ourselves to use. I mean, this was the model that Yale, my father, built the Stock Traders Almanac back in the 60s, was you wanted to put down all of the market cycles, patterns, indicators, trends, all in one book in a calendar format so that he could follow the market schedule along with his own. And, 57 years later, it's working for everybody still. I mean, Adrian's got one in his hand. I know Michael's got one. I got to get you guys 24 copies of the 24, which we just got in, but it still works. I mean, we're still people. We still go to sleep at night, hopefully. We still get up. We still pay our bills the same time every month. We still vacation the same time of the year. It still gets cold the same time of the year. Q3 institutions window dress and restructure portfolios. There's still the October 31st fund deadline for reconciling accounting with, the previous year's 10 months and the current year's 12 and the current year's 10, which creates that October phobia and September weakness that, we were all over this year. So it's high time that Bitcoin and crypto get, put through the same paces, and they're going to have to prove themselves right here.
All right, so hold on. So okay. So Adrian, I'll go to you on this real quick. So you often hear it's shitcoin season, it's alt season. I know we're focused on the Bitcoin side because there's longer history there. But any initial sort of sense of how that might apply to non-Bitcoin, crypto type speculative plays, which that shitcoin term it's often used for?
Yeah, fair question. So altcoin season. Listen, this is money driven and narrative driven very often, right? Something like that exists. It happens. If I were to place my guesses, it happens once or twice every year. Typically in the bull markets, much more than it does in the bear, right? Otherwise, it's a bear market rally most of the time. So these happen when we have a lot of liquidity, right? So these can only happen the closer to the peak you are, the more of the old seasons you probably get, or the stronger they are. So it is. Again, Bitcoin is the main kind of like a player, is the main vehicle that just attracts investors, right? The big investors who bring in the liquidity, who bring in the capital, that just spreads like a milk that is put all over the table, right? So when there's a lot of milk and it just spills it over the table, then it spreads across the whole table. And that's kind of like how the money spreads across the cryptocurrencies, right? Starting from Bitcoin, starting from Ethereum, and all of those most liquid coins, when they are kind of like saturated, right? I mean, there are a lot of holders and the prices are, effectively high. Then this is where there's a lot of attraction to pay attention elsewhere, right? Into the altcoins. So typically something like that happens again in the strong seasons, right? Which is towards the end of the year and the quarter four, typically October, November, and also April, May, right? Those are the strongest kind of like candidates up there. However, perhaps this is the challenge for me and for Jeff, to track it on the next issue.
It is. I'm going to have to jump off in a couple of minutes for another engagement, but I want to wrap up a little bit on my end and just thank you guys for having me, and Adrian for coming up to me in the first place and having the, the vision and idea to put this, potentially into the same format as the Stock Traders Almanac and the Commodity Traders Almanac. And we'll be working on that over the next several months. But, right here, it's October. Stuff's going on in the world. Market seasonality and the 4-year cycle have been tracking. Bitcoin's been tracking the pattern that Michael put up there in the spaces that I sent him. But, it's time to be greedy when others are fearful. If the patterns have set up, the fundamentals are there and the technicals are there. I mean, we're going in with our Almanac Investor Service. And so all sorts of assets, the broad market and lots of sectors, we'll be picking baskets of undervalued, growing, accelerating growth stocks over the next month or so. So, come check us out at stocktradersalmanac.com. Hit the link up at the pinned tweet and all that stuff. And make sure you follow Adrian for all your crypto trading. And, I'm going to be tracking Michael with all of his things that few of us understand. So thanks for having me, and carry on a conversation without me. And let's do this again soon.
Yeah, everybody also please make sure you follow Jeff. Always one of the greats to listen to. So make sure you sign up to his service as well. All right. So Adrian, let's go back to you on this. Okay. So have you done any, now that you've done some of these studies with Jeff, any sense of, could you just create sort of an automated strategy based on some of the things that Jeff mentioned, like the best 8 months, worst 4 months, to get maybe better risk adjusted returns? Or is it more nuanced than just, blindly following the seasonality?
Mm-hmm. Yeah. So thanks for the question. Much love to Jeff. Big guy. So following everybody as well as Michael. So regarding automating that, right? You can automate everything. It's just that the outcome may be different than you would expect, right? So there is again, regarding the seasonal strategy, right? Jeff mentioned very wisely, that they do not only focus on, the seasonal stuff. They focus on the macro finance. They focus on what's going on again with the monetary decisions, with the monetary regime, with the news driven, things and events, and the tactical stuff, of course, right? So they time. Jeff sent the email. I'm subscribed to his Vexler newsletter. There was a buy signal. I think the seasonal buy signal after they got out. Again, correct me Jeff if I'm wrong. It was June or July that it got out based on the MACD crossing to the downside, backed by the seasonal weakness, right, of the Q3. And right now it generated the reverse signal to the upside with the bullish MACD crossing, right into the best 8 month strategy. So I'm definitely not qualified enough to speak about Jeff's strategies, right? However, if Bitcoin subscribes, and it does so, to the Nasdaq, to what Nasdaq does with the best 8 month strategy and the worst 4 months, right? Then timing it with MACD, for instance, with the average convergence divergence is should yield similar results than it does for the Nasdaq stocks, especially that there is a lot of, again, strengthening correlation. So if there is strong correlation, it should produce similar returns anyway, right? So speaking of automating the systems, I'm much more of a technical guy, right? So regardless of why the technicals work, they do work, right? It's not a set of squiggle lines, because that's bullshit. That's not TA. It's kind of like guessing and just crystal ball, forecasting that doesn't make any sort of sense.
Louder. I get this. People, when I joke about the squiggles and like all the squiggly basement traders, it's because it's not tested.
Of course.
And it's literally just like people just drawing shit and making it seem like they know what's going to happen next.
Yeah. It's basically, you're right. It's basically kind of like what they transpire onto the chart, of their hopes and dreams, right? Or fears. So if they fear they're going to, interpret the same sideways pattern as the inverse head and shoulders, and when they are in short position, they're going to see the head and shoulders to the downside, right? So all that stuff, it's kind of like subjective unless you quantify that, right? So the quantified approach and backtesting approach, testing what works and testing what doesn't work, then even though you have a short sample size of data, then it's still better than nothing, right? And again, especially if there is something that just floats positive, and the risk-adjusted returns are better, than they would be on a simple buy and hold, right? Then it's good. And I would say that technical approach to, especially since crypto is so behaviorally driven, you don't have the cash flows in there. You do not have the main role that you have for the centralized companies, right? So there is not much on the, again, price to earnings, the financial statements and all the stuff that you greatly do in combination with the macro things, Mike, right? So it is mainly behaviorally driven, but then it is why technical analysis works so well with that, right? And because of when most of the time, like 70% of the time, it moves sideways. It just chops around. Right now, the volatility is lowest. Let me just open up the chart. It's going to be lowest since, let me just figure it out. Jeez, man. I think it's on average, it's the lowest it's been since February this year. Right, the average ATR daily is $600 approximately. So the daily ATR range is basically $600. Right, it's not much. And this causes and contributes to a lot of noise, which triggers so many fake signals. And I suffer this as a trend follower, right? So I will lose about 70% of the time. Still, because Bitcoin is behaviorally driven, there's a lot of play. There's a lot of big role played by the behavioral science up there, right? All of those biases, all of those prejudices, all of those, just extending our fears and hopes. This is what makes the whole vehicle move so fast and so strong when there is a lot of liquidity, right? So if Bitcoin trends and it does break out consistently and it does break out in a reliable manner, right? With all the confirmation and all the techniques like volume confirmed, breadth confirmed, again, price distance travel confirmed, right? The moving average confirmed and all this stuff, then such trends are very sharp, right? And this is where Bitcoin pulls off like 7x rallies, 10x rallies, like 90x rallies like it did in the past. So I'm trying to capture all those big fat tails in the return distribution rather than feed myself with the mean reversion plays, right? Because even though 70% of the time Bitcoin is going to chop around again, knock you out on the stops, right? It's going to run over a little bit of the highs and run over a little bit of the lows and just turn back again immediately. Then it is a kind of like there is a big opportunity cost, right? Because if you trade inside a 5% range, right? Or if you chop inside a $25,000, $32,000 range for Bitcoin lately, then okay, it's fine because it's acceptable. Still, the volatility is super low, right? $600. But then when you focus so much on shorting the peak, right? Shorting the swing highs, then you may actually catch yourself off guard trying to short every single breakout. And when Bitcoin finally catches on a trend, it goes up and higher and more vertical. So keep shorting. I know people who shorted the entire bull market rally, right? So it's very aggressive. It doesn't have mercy. It's merciless for the bears in the bull market. It's merciless for the bulls in the bear market, right? So it's merciless for the bears in the bull and bulls in the bear. So yeah, you can quantify that. There are strategies, especially the trend following breaker ones, which are generally proven to be the best performing ones, right? I'm using trend following with ATR filters, adjustable ATR filters. I have my proprietary strategy up there. It's volatility confirmed. It's trend based, right? So I'm gonna trade in the direction of a trend, and those generally again pay off most when Bitcoin catches on a trend. So most of the time in the bear, I stayed out of the trend, right? I stayed out of the trades. Most of the time, I was basically spending in 2022 outside, just watching on the sidelines, right? When there was a trigger, when there was a signal, most of them were stopped. There was not much profit, but then I watched Bitcoin on sidelines while being parked with the money when Bitcoin tanked, 90% or 80% or 70%, right? So what especially technicals do and the automated systems do for Bitcoin is that because it is mainly behaviorally driven, it's pure economics, it's pure law of supply and demand, it's pure technicals, right? Of course, interrupted by some trading events like the FOMC, what stocks do, and some minor stuff up there. Otherwise, it's mainly behavioral driven and technical driven. So I'm parking myself patiently to try to catch the breakouts, right? And hopefully once every, 3 times out of 10 on average, there are going to be massive breakouts. And that's where I'm hunting for those big trends. And you can quantify that. And there's a lot of resemblance to the NASDAQ, man. And please ask a question before I ramble myself to death.
What about anything that you've seen that would suggest that from a seasonality perspective, certain areas, forget about trend, tend to be more or less volatile? Because that's always the criticism around Bitcoin, right? And also you can argue it's benefit from a rebalancing perspective. It's a very volatile asset. So are there certain time periods where, independent of trend, it just tends to gyrate more, or is it still too early to tell?
That's a good question. So first of all, I would divide that into, I would take a look from the long-term perspective of the halving cycle, right? Which kind of again, just transpires similarly to the 4-year presidential cycle, right? So Bitcoin tends to perform pretty well in the pre-elections, right? Doesn't perform really well in the midterm bear markets, just like it typically does, right? And for the stocks. So there is a lot of similarity and resemblance in those terms. And it translates that if I were to compare 2023 to any of the last years, it would be 2019, 2015, right? And 2011. Those were the bullish years. Those were the years that just gave you the most bullish kind of things. And then, of course, not only were the pre-election years, they also aligned with the halving cycle, right into what those years were, right? So the halving cycle is a programmed thing in a protocol, right? And it's coded in Bitcoin's protocol that every 4 years, approximately every, 210,000 blocks, right? If I'm not mistaken, it's going to cut off the rewards by half, right? So this is kind of let's call it the quote unquote intrinsic source of Bitcoin value. It's the scarcity, right? Outside of its utility, it's the scarcity that, of course, when there's less of it, we want it more, right? Because of the scarcity. So when it becomes more and more regularly expensive to get Bitcoin, and hence it's less available to public, then we wanted more. We are ready to pay more for that on average. This is, again, not so much of my opinion. This is the laws of economics, right? So you've got the 4-year cycle. And what Bitcoin does is most of the time, it moves in a yearly bear markets and 6 months or a year on average accumulation or so, somewhere into the disbelief stage. And then it shoots up, for a 2-year rally. That's what it typically does, right? So the volatility, answering your question, the volatility is going to be, of course, biggest, and it's going to grow when there's the bull market extension, and when there is of course, the peak, the peak moment in the market. So this is where the volatility is the biggest. This volatility is a measure of risk, of course, in finance, right? So when you allocate your portfolio, when you distribute allocation to your portfolio, you can measure that not only hard cash wise, you can try to adjust it volatility wise, right? So I wouldn't want to be much exposed to Bitcoin when it's the most volatile, basically, right? So position sizing, with the profitable strategy, this whole risk management game and regime is basically what helps you become profitable with Bitcoin, other than, throwing the darts in and just rolling the dice and praying for the outcome. So quantified approach can be utilized there. The liquidity is the biggest, of course, in towards the peak. This is where, not the liquidity, the volatility is growing towards the peak. This is where, the trend gets more and more aggressive, right? It doesn't kind of like move in a straight line. It moves more and more aggressively vertical, because that's where the behaviorals, that's when the hindsight bias kicks in. That's where the overconfidence kicks in. That's where the regret bias kicks in, when you just kind of like, oh, I missed another bottom. I missed another, I better jump on the bandwagon right now, right? So kind of like empowers this positive feedback loop. And that is basically the 2 years, especially the ending phase of the second year of the bull market, that you need to watch the most for the volatility. And that kind of like transpires to local liquidity trough, basically, when the peaks and there's this inflection point, right? Does that make sense?
Yeah, no, and obviously there's a link between liquidity and volatility in general, right? I mean, when there's a macro backdrop where liquidity is evaporating and things become more volatile, liquidity is the answer to volatility. That's really the story of the Federal Reserve, of really all asset classes. Mm-hmm. I am curious, on a tangential note. Mm-hmm. How the hell did this Forbes 30 under 30 thing happen for you? I saw that. I didn't realize it until just now looking at your timeline, but that's pretty cool.
Oh, man, thank you. So that's not a cover, right? That's a little bit of what you call it, like an insert, right? That's just that's a paper. I appreciate it still. Let us share it. So, I'm a tax resident in Portugal, right? That's where kind of like I reside. That's where I, live. So it would make sense for some people, who approached me, who appreciated, what I did, and there was a question basically if I wanted to, to take part in such a project, right? And then be listed on the Forbes 30 under 30. And at that time I was still 29. I've just turned 30. So I couldn't apply. I couldn't apply that so well anymore. And, I think it's just being open to opportunities, right? This year has been very strong with creation of the opportunities, right? I had honor to meet so many incredible people. And of course, the very fact of having this space with you, Mike, is I'm feeling very honored, right? Because I know who you are, and I've always been kind of like a big admirer of yours, right? And there was a lot of, look up. I look up to you, man. I mean, that your works are pretty awesome. So being here on the space,
hold on. First of all, I appreciate it, but I'm just a guy, and I will say for the audience that's here, and I'm sincere to say this. Adrian has always, been kind and also sent me kind of like random DMs that were supportive. I'm not going to say it here, but I tend to be continuously disappointed by humanity. There are people that I've interviewed on some of these spaces that I find out have been bad-mouthing me behind my back, and I find out, I'm not going to call them out, but some actually very disturbing things have been said. Adrian is not one of those guys. He is one of those good people, so I encourage everybody to follow him, and I always go back to follow good people. Doesn't matter if somebody's a great trader or a shitty trader, if the cycle's not in their favor or the asset class not in their favor. Yeah, you should reward people that are actually trying to do good things and help people, right? By actually amplifying their messages, not two-faced liars. That's more of a side note. But sorry, Adrian, go ahead.
You're right. I perfectly agreed. I mean, the whole issue, I think that you're very right about it. And the whole issue I've noticed is, again, I may be wrong. I'm just a young fucker, right? I'm learning how the world works. Though what I've noticed is that people, of course, tend to get extremely, what do you call that, offensive, not only defensive, offensive when there are a lot of emotions in play, right? So when I see somebody, of course, like, some people smearing you up for whatever opinions, like everybody has an equal load to whatever they think. Nobody can take that away from me, right? Nobody can take that away from you or anybody else. That's our thing. We can have our own opinions, right? And it's completely irrelevant for the other people to kind of like comment on that when you think about that, right? So what I stopped doing as soon as I got the CMT accreditation, it is a game changer to me, right? I mean, I learned so much about myself, about the fields, especially in the psychology stuff, that I was really amazed for how many wrongs that I did in my life came from those prejudices, biases, right? From my own opinions. So what I started doing is I stopped caring about opinions at all in the first place, right? So I try to approach things and accept them as they are instead of trying to label it if it's good or bad of what I think about that, right? I don't need to have an opinion about anything. Well, I should have opinion about some stuff, right? I'm a Christian, I'm a Catholic, I believe in God and all this stuff, right? So I have my system of beliefs, which is, again, imposing certain opinions on some topics. However, I try to be very open-minded in terms of anything finance related, because finance is always going to prioritize the rational thinking, right? So rational thinking means facts over the opinions. Relying on facts is profitable. Relying on opinions is not, right? So I can be lucky and, guess the trade right once every 10 trades, even I don't know, like 5 times in a row, right? I can roll a dice or flip a coin and I'm going to land tails 10 times in a row, but doesn't make me the genius coin flipper, doesn't make me the best coin flipper in the history. Of course not, right? It's just luck. So I started understanding the essence of what luck is, of how to approach things rationally, or as much rationally as I can or should, right? Trying to, first of all, not judge anybody by their opinions, because why would I, right? Understanding that my opinions are completely irrelevant per se, right? Why on earth would anybody care about my opinion, right? Why would they do it? There's no good answer, because nobody cares about my opinion, to be honest, right? And even if they do, I highly recommend so that they actually stop doing that, right? Because when you express your opinion, most of the time what you seek, again, intrinsically, like internally, is seek agreement, confirmation. So you feel better when there's confirmation, and you feel bad when there is this disagreement, right? So we tend to search for confirmation, which is, again, nothing wrong. That's how we work. However, understanding and discovering that within myself, that I don't need to search for confirmation for other people, right? I don't need to label stuff. I can just take them as they are. And, even if this sucks, even if the reality sucks, it very often sucks. But there's often this grief cycle that takes you from the disbelief, from this cognitive dissonance, that you need to take time to adjust and classify that, in your mind, put it, compartmentalize that in your mind, to, take you through all the anger, through all the depression, until you reach the acceptance. So I've learned how to accept things as they are much, much faster, right? And it transpired not only into the finance, it transpired everywhere, outside of the finance. So I appreciate everybody's opinions. I appreciate their chance to have an opinion at all. Doesn't matter if it's the same or different. If it's the same, cool. If it's different, also cool, right? Perhaps I'm wrong. And well, guess what? At my systems, I learned how to be wrong, because I'm wrong 70% of the time on my trades. That's what trend following is, right? So I just became good friends with losing. I became good friends with being wrong on so many things in my life, that I stopped caring about my opinions. I stopped caring about projecting my opinion onto the world outside, because most of the time I'm wrong anyway.
Yeah, no, there's a lot of what you say, which I think is rooted in a lot of humbleness and humility, which I think is critical, because I always go back to markets humble us all, just not all at once. So it's good to have your starting point being humble and realizing that
That's right.
Our thoughts and opinions don't matter, right? What matters is, the overarching cycle, and that goes back to seasonality studies. We haven't talked about where people can find the study. So where do people turn to look at the work that you and Jeff have done?
Right on. So some time ago, by the end of the month, by the end of September, Jeff, we held it on the Jeff's website, right? So that was available on the Jeff's website. If there is anybody that basically wants a copy right now, then even though it's off the website, I still have a link to it. So you can drop me a DM basically, and I'm going to give it to you. Somehow it's free of charge, right? We didn't charge for anything. I didn't take a single cent. I just wanted to commit I'm a man on a mission, right? I'm a CMT, crypto native CMT, and there's a lot of responsibility for me to spread the right message, the right and accurate message, the right representation for cryptos, right? So I'm kind of like promoting this free thing to take advantage of, right? And this paper is really a solid paper, not because I was there, right? I'm the smallest fucking part of this article. It's because the Jeff was there, and because it is the first ever seasonal study, accredited study in a way, right? It's backed by CMT, it's backed by name of Jeff's Hirsch, which is so much more relevant and important, that when the institutions come in, they do not care about my opinions. Why on earth would anybody care about this bald-bearded fucker in opinion? So they would care about the numbers. So this article provides the numbers for the first time in a reliable manner, right? And again, long story short, if anybody wants that, I mean, I'm honored and I'm humbled. Feel free to drop me a DM and I'm gonna fix you a copy somehow, right? Otherwise, there are spaces like this excellent space of yours, Mike, right? You host so many beautiful pieces and so many great write-ups. I admire that. And, this is one of the other ways to kind of like get the opportunity to learn about this. Otherwise, again, Jeff and I, we have plans to develop that and expand that into something way more extensive and bigger, right? I cannot, again, just spoil too many details, right? Because this is upon Jeff's agreement. Yeah, I think the simplest way is going to be to drop me a DM.
Everybody, please make sure you follow Adrian. This again will be podcast under Lead Lag Live soon, and stay tuned. Adrian, really appreciate you. I have a lot of respect for the ambition and for what you're trying to accomplish in a space that does not have, for a number of years, real thought leaders that I think are serious beyond just putting emojis. So the fact that you're trying to make this more institutional, I think, and more thoughtful is a big plus. So please, everybody, support Adrian. Appreciate it, Adrian.
Thank you so much, Mike. You're awesome, and I admire your works, and please everybody follow Mike as well. He's an excellent guy and great pieces. Thank you so much for having me.